Hello and welcome to this week's episode of the Mortgage Broker Builder, the CEO1440 Show, where we talk about all things mortgage, sales, and just having a good life and maximizing your 1,440 minutes every single day. Our goal with the show is to help loan officers, real estate agents, people in that real estate space do more, do it better, faster, understand more programs, just have a better working knowledge. And this week we have a guest coming back to us for a second time, Peter Zomick with Arrival Home Loans, here to talk about their really cool bridge product. So if you're here, you're going to find ways to probably sell a couple more houses, help out your clients with some different solutions, maybe that are in a pinch and can't qualify traditionally. They've got some weird things going on. And it's just a product that I feel if you don't have this inside of your toolbox, you are definitely losing out on business for sure. Not a question. You knowing about this, you will not do less business. So Peter, how are you?
I am well. We're doing well. We're growing month over month. We're continuing to grow and expand and, educating more and more loan officers, like you said, to help them grow their business.
Yeah. And I sabotaged myself. I actually asked I asked 2 minutes ago about the pronunciation of his name just to make sure. And then I actually said it exactly wrong. Like I self-sabotaged myself. But so what we're here to talk about today is Peter's with Arrival Home Loans. Why don't you just tell us a little bit about yourself, your title, what you do. I'll let you do your own intro instead of me doing it, but tell us a little bit about who you are, what you do.
Sure. So I'm Peter Zomick. I am the Vice President of Sales and Business Development for Arrival Home Loans. I've been in the mortgage industry for 32 years. I have been a loan officer on the retail side. I have been a loan officer on Consumer Direct, and I've been in leadership for the last 20 years or so, growing distributed retail and consumer direct teams. And almost 2 years ago, I was recruited to go to the private money side in consumer bridge loans. So this is residential consumer bridge loans for folks who want to buy a primary residence, or a second home before selling their current home.
And what I like to say is this is not your grandpa's bridge loan. If you are not familiar with what they do, there's probably a really good likelihood that it's going to blow your mind, and that it's completely different than anything you think of when you think of bridge loans. So listen on. Peter, will you just give us a little rundown? So what your product does, kind of who it's for, just the Reader's Digest version of what Arrival Home Loans does and what your cross-collateralization program is all about.
Yeah, I think it's really important first to just understand the buy before you sell space in general, because over the last 2 years, it's grown, and there's been a lot of different types of companies, that claim to either, offer buy before you sell solutions or bridge loans or swing loans, and it can confuse a lot of loan officers because a lot of companies get lumped into this whole buy before you sell space. I don't know of another organization other than ours that offers a singular solution to help somebody buy before you sell, make a non-contingent offer, or save a deal going south through a conventional or jumbo fallout on a purchase. And so, the problems with a lot of folks that want to be out in the market to buy a new home, before they sell their existing one is threefold. One, a lot of folks already have a mortgage on their current home, and to go and qualify for another mortgage, in addition to all their other monthly obligations, can be prohibitive from a debt-to-income ratio qualifying perspective. And so a lot of folks don't think they can buy a new home until they sell their existing home. Well, we saw a lot of companies come on the market that solve that kind of debt ratio problem, that offer these guaranteed backup contracts, where I want to go buy a new home, I have a home to sell, and so there's this third-party company that will come in and they will make a non-contingent offer on the home that I need to sell. And, Fannie and Freddie and the GSE say, hey, if you have a non-contingent offer on your home, then you can remove your current PITI mortgage payment from your debt-to-income ratio, and now you can go qualify for that new purchase mortgage and not have to worry about, the two mortgages from a qualifying perspective. That sounds great, and it solves the problem, but it's not really that great for a consumer for three reasons. One, the quote-unquote guaranteed backup contract is usually a lowball offer. It's usually 75 cents on the dollar, and so they're not getting the fair market value for their home. Number two, they need to find another buyer for a larger amount within 60 days, or they're forced to sell that home at a lower price. So it adds a lot of stress, pressure, and anxiety, on this homeowner who needs to find another buyer before they buy this home, and it's expensive. They charge to put that offer on there. So it begs the question that, okay, I can now qualify for this new mortgage, but in America, there is a record amount of equity trapped in existing homes. So I may be able to qualify from a debt-to-income ratio now on this new home because of this guaranteed backup offer, but I don't have money for a down payment. So now I need to go get a home equity line of credit, a second mortgage, or a traditional bridge loan that is usually a first lien position on my departing home. So I got to pay off my low interest first mortgage, get a higher interest bridge loan so I can get the money to get for the down payment for the purchase that I can now qualify for. So that's a second transaction. Then once I get that money out for the down payment, now I actually have to go and get my purchase money mortgage, which is another transaction. So to buy before you sell in the traditional space using a guaranteed backup offer, using a traditional bridge loan, and conventional jumbo financing for the purchase is 3 separate transactions, 3 sets of paperwork, 3 sets of closing costs and fees, and we just think that's too much. So at Arrival Home Loans, we took a step back and really modernized the buy before you sell space with a singular solution. What we offer is uniquely different in the market space. And like you said, John, it's kind of a turbocharged, high octane, not your grandmother's bridge loan. Our bridge loans use cross-collateralization for the turbo. And what that means in a nutshell is our singular solution is one mortgage. So it's one mortgage note, one set of qualifications, one set of paperwork, one set of signatures. But we collateralize that one note on the departing home and the new home that they're purchasing. And we do that to allow for higher loan amounts. In fact, 95% of our fundings are for 100% LTV of the new home purchase or more. We're the only bridge lender that allows for more than 100% LTV on a purchase. So what that means in a nutshell is we actually allow cash back on the funding of a purchase. We do that by limiting the LTV on both properties to 75%. So it's 75% CLTV of 2 properties, which allows us to get the money to complete the purchase. It's a pretty unique program. And bringing it into modern day, we are exempt from the ability to repay because of the short-term nature of our product. It is a temporary solution to allow them to buy before you sell. Our term, it's an 11-month balloon. We do require interest-only payments, and on average, the interest rates are about 10%. This is a private money loan. It's a stated income. There are no debt-to-income restrictions, and we don't need appraisals in most cases. We use internal AVMs for valuation, and for the majority of our transactions, that's enough to get enough money to get them to buy the home at the loan amounts that they're looking for. In the rare instances where maybe it's new construction they're buying and the AVM doesn't have sufficient data, or the AVM isn't coming back with a value high enough, and the agents and the lenders and the borrowers are comfortable that, hey, the property's going to appraise for more, we do allow you to go and order an appraisal, and we'll use the appraised value in lieu of the AVM if the AVM is coming in short.
Yeah, I work with a couple of different and have quite a few different bridge solutions. And they have their own little uniqueness. Your guys is super. That cross collateralization piece is where I don't think people really get that. I'm going to add the value of property 1 plus the value of property 2, add them together, divide by 75%, and I've seen it. It provides an opportunity for somebody to go in and maybe if they're downsizing, buy that new home cash and still have, some money set aside to move out, do a little bit of painting, some other things before they go and list that other property. And, it definitely fills a niche. And what I like to say inside of these spaces is it may not be for every client, but it literally could be for every client. Like it's not a one size fits all, but it could be every listing opportunity you go to as an agent. Like this might be something that works really well. And people today are just being told no, like I don't have something for you. your job's a little tricky or you have to sell it. And every day there's people that want to transact that are getting told no by their lender, where this could open up a lot of yeses. Hey, John here, not trying to sell you anything, coming at you with a bunch of hot commission breath. But what this is an FYI letting you know that we do have a community where we have shared hundreds of posts, hundreds of sales scripts, techniques, tactics, different things to help you grow your business and maximize your 1,440 minutes every day. I'm not sure if it's for you, but it definitely could be for you. So go in there and check it out. CEO1440.com will take you to a place. You can join our free group, give it a sniff test. If you like it, awesome. We've got a lot of other things. We probably would like to sell you something, but right now that's our gift to you. Get in there, check it out. CEO1440 will take you to a place where you can sign up to be part of our free group. Enjoy the rest of the show.
Absolutely. For a loan officer, this solution, this singular solution, is probably the greatest conversation starter to form new agents with real estate agents and builders. And if there are loan officers that already work with real estate agents and or builders, this is a way to really add additional value by helping them create more transactions. And what I mean by that is realtors have a book or a pipeline of future buyers that are currently sitting on the sidelines because they have a home to sell. And those buyers either don't know that they can go buy a home without having to sell their existing one, or they have absolutely no motivation to list their current home and try to sell it now, but they do want to buy a new home now, and they don't think they can. And so let's talk just for a minute, what are the reasons why people don't want to kind of list their home, and try to sell it, especially when they're living in it. If you have children or pets, one, just keeping the home immaculately clean all the time because you never know when a potential buyer is going to come through can be very stressful, right? Two, the emotional aspect of depersonalizing the home and make it more like a house so that a potential buyer can envision themselves in it and don't think they're visiting somebody. And what I mean by that is, if you list the home while you live in it, the agent's going to say, get rid of all of your memories, get rid of your family photos, get rid of your pictures, get rid of everything that is going to distract the buyer from envisioning themselves in that house. That can be emotional for people, but putting all that stuff away. And then God forbid, you're working on your children with homework or you're cooking dinner and you get that call from the agent. We have buyers in town. They're leaving tomorrow. They want to swing by in the next 20 minutes and look at the home real quick. You got to stop what you're doing, put the food away, stop with the homework, get everybody out of the house. And just for those reasons alone, they don't want to list their home while they're living it. God forbid if they've been in the home for quite some time and they need to do some minor renovations, paint, carpet, curb appeal, all those things. It's a lot easier when you're not living in that home. And then, of course, not even talking about professionally staging that to maximize the sales price. Now, what if those agents can go to that pipeline of future buyers, talk to them about the singular solution, our cross-collateralized residential consumer bridge loan. They can get 8% of those buyers who are sitting on the sidelines, off of the sidelines, out into the market today to go and look for and purchase a new home today, helping the buyer, making them happy, getting the agent a buy-side solution, which is going to get them paid, and then you as the loan officer originating that bridge loan getting paid. But wait, it doesn't end there. After they buy that new home and they move into it, they're going to list their departing home. That's going to open up another transaction for that real estate agent for listing, which they can make money on as well. And then when that listing sells and the departing home sells, they will pay down a portion of the bridge with the proceeds from the sale of that home. But then they will still have a balance on that bridge loan that's only collateralized on the purchased property that they're now living in. That loan officer who originated the bridge is going to come back in and do another transaction without us because all we do are bridge loans. They will do a rate and term refinance to pay off the remainder of the bridge without our involvement. And so they get a second transaction as well and don't have to worry about the fear of flipping. It's a win-win-win for everybody all around. And it's a private money solution that more people need to know exists. It sounds complicated, but it's not.
Well, in the real estate and lending world, our pay is a direct reflection of how large the problems are we solve. If the only problem you have is what is your interest rate and you're just being shopped as a commodity, well, you get paid in accordance. If you're going out and truly solving someone's problem like you are here, there's multiple transactions there, but it really puts the client in the best spot. And the one thing that I don't see enough people talking about in this space and just across the board, a lot of people that I speak with, they're apprehensive about selling their house today, not because they're worried about that they're going to get their 3% to a 6% interest rate. Their big concern is if I go and put my house on the market and I sell it, there's not a lot of inventory. What happens if I now am homeless for 6 months trying to find a new house? So they don't want to. They're apprehensive to list because of the unknown of what happens if I sell mine and can't find something. Am I then pigeonholed into buying some piece of crap? Do I have to go out and rent for 6 months? Do I got to move back in with mom? So for the agents, having programs like this or something that you can come back with, and I have a couple of different ones that we work with quite a bit in this very space. And it is, like you said, a great conversation starter. And yours is one of the ones I really like what it does and the optionality that it provides. But agents, if you have clients right now that are not listing because of the fear of not being able to find that next home, this eliminates that fear. It gives them 11 months. They can go and shop. You know what you've got going on. Go and find your new house, the one that you love. You've got a solution. Then you kind of bought yourself a buffer to get that other home sold, which is just, that certainty is priceless, really.
Yeah, it's interesting. You mentioned the 11-month term, but on average, our loans pay off in about 4.5 months. We actually just had a loan that closed on May 4th, and on May, I think, 16th, which was Friday or something, we got a request for a payoff. They sold their home. It was listed. They just weren't sure if it was going to close or not. The buyer was having problems kind of getting qualified. They really loved this home. The bridge was their solution to get it. And so there's no prepayment penalties on our loans, whether you make one payment or 11 payments. There's no minimum interest. There's no EPOs to brokers. And it's just a really fluid, easy loan that we're closing on average in 16 days right now.
Yeah, and loan officers, if you're listening out there, I coach a lot of you and you come to me with deals and problems and how would you do this? And sometimes your solution as a loan officer is, well, I'm going to go reach out to their IRA provider and we're going to take out we're going to set up distributions for an extra 10 grand a month so they can afford both payments so I can do this bridge. And you're creating all of this cascading justness of craziness where something like this comes in, and since they're not looking at their income, Arrival wants to make sure that when it's all said and done, they actually do have an exit to get out. It's not like they're in prison or something and never going to work again. Maybe you guys do loans to people in prison. I don't know. But we jump through these hoops of trying to come up with a solution where sometimes there's a better one. So when you're asking yourself, if somebody needs to liquidate an IRA or set up distributions to qualify so they can carry two houses, that's probably an ideal client to look at this and say, does this or does this not make sense? Because as you start looking at, if I'm going to liquidate money and pay a penalty, 10% might seem like a lot, but if I'm paying a 30% penalty liquidating something and I pull out 100 grand and I pay 25,000 in taxes, that's a lot too. So you have to kind of look at it across the board. And quite often, this makes a lot of sense if you can understand how it works and be the person that connects the dots. I just think it's a cool product. Hey, John here. If you're anything like me, you like to get in, poke around, you like to check things out before you go diving in head deep. We've got a group where you can do that very thing. CEO1440 is a community. We post in there all the time. There's hundreds of different people, a lot of different conversations and things that you may be able to take away and apply into your business. Now, the guarantee, I can't make you any guarantees. It's not going to 5X your business, but what it might do, it could 5X your business, probably will give you some things that you can tangibly take away and start applying in your business every single day. Everything we post may not be for you, but it definitely could be for you. So check it out. The group's free. Would love to see you in there. CEO1440.com. Enjoy the rest of the show.
You're absolutely right with, what you said about, taking withdrawals or distributions. We just closed a loan last month. Borrowers had $3 million in assets in the market, and they're smart folks. They understand the value, time, effort of money, and if they could have paid cash for that house, but they would have needed to sell their portfolio or a portion of it. That triggers capital gains, right? And they didn't want to do that, so they'd rather, get the bridge loan and keep their money invested in making more money, and not have to worry about the capital gains. 2 months ago, when the market was down, we had another similar situation where they had the assets, but the market was down. They didn't want to sell those stocks at a loss, and so they wanted to keep them invested, and they took the option for a bridge loan instead. Our product is great for, people going through divorce, but they want to buy a home now. People coming into inheritance, but they want some money now. People going through probate, but they want to buy a home now. Your classic buy before you sell solutions. The three things that I say is, when should you think of arrival? There's three primary reasons above all else that you should be thinking about arrival home loans and our residential cross-collateralized consumer bridge loan. One, anybody that wants to buy a new home before they sell their existing home. The second reason, last year, according to Redfin, 34% of buyers were cash buyers. Like you said earlier, it's a lower inventory market, and I don't know very many sellers that are accepting contingent offers on their property. And so if you are a buyer and you have a home to sell, and you're serious and you really want to buy a home, you have to be able to make a non-contingent offer. And so if you want to make a non-contingent offer, you should be thinking about arrival home loans. We do TBD underwrites. We offer pre-approvals that are worth a lot more than the paper that they're written on, that will give you the confidence to have your agent go and present an offer on your behalf that's non-contingent upon the sale of your home. And then the last reason is what I call a fallout last minute from the domino effect, right? I have a home to sell and I'm buying a new home. I have buyers for the home I'm trying to sell. I need those buyers to buy my home so I can go and buy this new home. The clock is ticking. I'm getting approved for my loan. Everything's going great. The buyers of my house are going through the process, getting approved for their loan. And at the very end, they hit a hiccup. Something happens. They either have something that happens in their life, something that happens in their finances, something that happens in their approval, and they can no longer close when they were supposed to close. That puts my transaction of me buying that new home now in jeopardy, and I can't get my clear to close until we get these people approved. So now I'm stuck, but I really want that home. That's the domino effect. So if you have last minute fallout, conventional or jumbo, on the purchase of a home, you should be thinking about arrival. A lot of times we can come in and save the day and get the loan closed fairly quickly.
Yeah, it's so many places. Real estate agents, this is a solution that if you've been doing real estate for 3 years, 5 years, my guess is, and you do any business, you talk to anybody, there's been tens of thousands, if not maybe even 100,000 plus of commissions that have been lost by not having this product. Because we all had the fallout where the last minute thing happens and craziness happens and it just sucks. And we all just chalk it up as part of the game. Well, it doesn't always have to be part of the game. There are solutions now. And the same moving forward. Peter can't make any guarantees that knowing about this will make you more money. What I like to say is the guarantee I can make you 100% is understanding this product and how it works. You're not going to make any less money than you are right now. Right? So it's not going to, understanding and having this product in your quiver is not going to all of a sudden, you're not going to make less money. So it's just one of those kind of no-brainers that I think understanding how these things work are super important. And to separate yourself from the Rocket Redfins of the world, you want to do something different and actually add value. Well, you probably can't add value by, more Super Bowl ads. Maybe you can add value by better products that actually solve problems.
Yeah, well said. Is this going to revolutionize somebody's business? Probably not, although there's a handful of loan officers that have kind of switched their focus to really focusing on this segment of the market and have started doing quite a bit of business with us. But through our research and what we're looking When we talk to loan officers, when we do our post-closing surveys and our interviews, when we're talking to agents, we think that if you become well-versed in this singular solution with Arrival Home Loans, you can grow your business by 20% without really investing a heck of a lot more, other than beginning to talk about this consistently and positioning yourself more as a subject matter expert in the buy before you sell space, which is what we've done over the last 2 years. We went from 3 wholesale relationships almost 2 years ago when we rolled out our wholesale partnership to roughly 80 now. And that's still not a lot. So this is an untapped market for loan officers and real estate agents to talk about this solution and bring it, to Arrival through your loan officer. And we can help everybody make more money, help everybody get into homes that they didn't think they're able to get into at a reasonable cost.
Yeah, like I said, I've looked at this. You and I think, probably talked the first time back, I don't know, 6-12 months ago, something like that. Maybe it was even 2023. It was right after you first got there, and I was kind of blown away at what it does, and we're signed up. Right? I can offer this product, and actually got a little case study, a little thing brewing on the back end where I'm going to go gung-ho on this particular thing myself, but running a little case study. If I was a loan officer, what would I do to go from 0 to 50K a month in revenue? Like, this is part of what would be my mix if I was going out there today to try and, I'm not going to battle the people that, want to make 74,000 outbound phone calls calling credit triggers or something. I'm going to go after a niche that's a little bit different and play it a little bit smarter. I know you guys are licensed in quite a few states. How many states are you guys in now?
So we are in 11 states right now. And we have an application out for 1 additional state, and we have 3 more that are getting ready to go out. So currently we're in Arizona, California, Colorado, DC, Georgia, Idaho, Michigan, Oregon, Washington. We're in Texas, and I'll talk about Texas in a minute. We just got licensed in Utah. We're not accepting applications just yet. We're going through our doc paperwork and compliance review. 3 weeks ago, we submitted our Florida license application. We're really, really excited for that. And then we have Tennessee, Maryland, and New Jersey that are next up. The goal is by the end of this year to be in 20 states.
Okay, nice. And so, you'd mentioned before that you've got some agents that are like just doing this. They're making this their key focus. What does their business look like? Like, I'm sure you have pretty in-depth relationships with them. Like, there was a time not that long ago, you were the end all be all. You were all things sales at Arrival. You've now hired account executives and other things. Like, what's their pulse? What are they doing that they're working? Are they running Facebook ads? Like, how are they getting out there? Is it just nitty-gritty one-on-one conversations with agents? What are they doing that you're seeing that's really working for them to generate this business, or at least interest in the business?
So there's 3 things, that loan officers who have kind of really focused on this, buy before you sell space are doing. From a consumer direct standpoint, 1, they're mining their database, their existing database, to make sure that everybody that they've ever closed a loan with knows that this is available and this is what this loan officer specializes in. And please share this, with anybody that's talking about, thinking about buying a new home, especially if they have a home to sell. The second is real estate agents. They are very involved in the real estate community. They do webinars and lunch and learns for agents to explore what this avenue looks like and the successes that this solution brings to a real estate agent's business by adding value to the end consumer, who would be their buyer, and then teaches them how to make sure that they can not only get the buyer's agent, compensation for helping them buy a new home, but then after that, getting the listing to make the money for selling their departing residents as well. And then the last thing that they do is they talk to builders. A lot of builders either have mortgage companies or have preferred mortgage companies, and all this loan officer is trying to do is take up a little space in between the preferred lenders or the builder-owned companies. Say, listen, this is a little known niche product that you guys don't have, and you're turning away potential buyers because they want to make a contingent offer on new construction and you're not allowing it, and you don't have a solution for them. Let me be that solution for you so you can sell more homes. The buyers can get under contract without the contingency, and I can grow my business as well. That's what we see in how they're doing most of their marketing. They have pretty cool websites. I think one of them owns buybeforeyousell.com. He's out of Colorado. So they do a lot of, I don't want to say Facebook advertising, but it's more guerrilla marketing, that it doesn't have an expense from an advertisement perspective to it. It's just more making sure that they're known out in the communities.
Hey, if you're listening to this, quick reminder, we have a free group, CEO1440.com. Jump in there. Tons of posts, tons of information, a lot of stuff we're bringing day in, day out to help you do more with your 1,440 minutes every single day. CEO1440.com. Check it out. Yeah, there's an education component, right? I need to educate the realtor, the builder, those kind of people. I need to educate them to then have their eyes just be open to bring me that next deal. It's probably the best place because they're actually talking to the people that are getting the no's today versus trying to go to direct to consumer. Yeah, it's a very small segment, but buybeforeyousell.com is a great website. I'd love to own that. What else are you guys seeing? And as far as just, I guess I'll step back. If somebody has a deal, what's the timeline? So let's say I'm an agent. I reach out to, let's say you're an agent. You reach out to me. I have this product and can offer it. We do it here at our company. If somebody wants to do this, they reach out to me. What's kind of the timeline? What does that look like? How does it work? How quickly do you close? How do I submit a deal? Just walk me through what that would look like.
Yeah, absolutely. So, whatever loan origination system you use, you would actually, take an application, a complete, full, honest, accurate application. Once you have your first loan with us, we'll send you a link as a loan officer, and you will request your third-party origination portal login. Currently, I'm doing the logins, and, loan officer wants something, usually within an hour or less, they will get their login, and they can go ahead and export that application out of their LOS as a MISMO 3.4 and upload it into our system, and they have just created a loan. We have 3 borrower forms that we require to be signed, and we will make sure that the loan officer has those forms. They can give those to the borrower to sign and fill out. We do allow them to be docu-signed. And so the only other thing is we have this thing called a loan summary. There aren't very many loan origination systems that can account for cross-collateralized bridge loans without doing a heck of a whole lot of customization. And so this loan summary form we have talks about both of the properties, what they're worth, do they have a current first mortgage, do they have a second mortgage. And I think I mentioned that we will sit in second lien position on the departing home. So if they have a nice low interest rate first mortgage right now, we're not going to require them to pay that off, which is pretty neat. A lot of other bridge lenders would make them pay that off. And then we ask about the exit. What's their plan to get out of this loan? How long, do we think it's going to take to get out of this loan? And then we also ask, are we plan A or plan B? We understand that we are a backup solution a lot of times, but that backup solution winds up getting executed. And so we will originate the loan, we'll process it, we'll underwrite it, we'll do all the disclosures, knowing darn well that we may never get that loan, because at the end of the day, it's about the relationships that we're building with our broker and lender partners and the loan officer specifically. And if we're going to be the backup on some deals, I know that we're going to be plan A for other deals as well. I mean, we have a lot of fallout. On average, we have 35 to 40% fallout in any given month. So we know that going in.
So let me ask you on that. If there is appraisals, title work, those kind of things, is that who gets hit for that burden?
So remember, most times we don't need any appraisals. Right. But if an appraisal is needed, we have a few preferred appraisal management companies that we want our brokers to use. But as long as the acknowledgement of intent to proceed has been signed, then the broker partner orders the appraisal, and they have the borrower pay for it just the same. We just ask them to order the appraisal in our name. If you're coming to us as a deal savior and you already have an appraisal, as long as we can get that appraisal transferred to our name and it's a good appraisal, air compliant, we can use that appraisal.
And how does this impact, right? So it's a TRID loan, right? You've got, is it a TRID loan? Does it fall into the call reporting? So as a broker, how do these things happen on the back end? There's trailing residence. Like, does it mess up their call report? Am I going to have like some broker reaching back out to me and said, I closed this and now my call report's all jacked up and the state of North Carolina is harassing me? Maybe
No, we haven't run into that. The application in our broker partners portal is simply a purchase. I mean, for HMDA and all that stuff,
okay.
And their call report's a purchase. On our side, we need to know, what the exit strategy is. Are they going to refinance into a longer term mortgage strategy with the remaining balance, or are they going to pay off the bridge completely, when they sell the departing residence? With some people have enough equity that they can do that. That's just important for us to know for our reporting. But yes, it is a TRID loan. And what's unique about this is, for all intents and purposes, it is considered a bridge loan. It's considered a purchase transaction. However, it has a cash out component to it. And when we talk about TRID and we talk about cash out on a primary residence, there's a 3-day right of rescission on a refinance of a primary residence, right? So let's say that we have a purchase that's supposed to fund, record, and disperse this coming Friday, and the departing residence is a primary residence, so it's a cash out refi component to the purchase. There's a 3-day rescission. So all the loan documents would have needed to be signed yesterday, Monday, to allow for rescission, to allow for funding, recording, and disbursement on Friday. And so that's the only tricky piece that you have to understand. And we are, I believe, the only bridge lender that allows for multi-state cross-collateralization. So as long as we're licensed in the states that the properties and the buyers are looking to buy in, and the loan officer from our broker partners licensed in those states as well, we can do multi-state cross-collateralization. And you asked a little earlier about the title companies and stuff. That's a place where we spend a lot of time on our operations side, educating and training title companies how to do a cross-collateralized consumer bridge loan. Sometimes, if it's within the same state, we use one title company. But if it's, interstate, you may have a title company, in Oregon that's not licensed in California. And so we have to use different title companies that kind of communicate with one another. One title company serves as the transaction for the purchase, and they fund and they disperse everything, and they'll disperse proceeds to the other title company. So there's some moving parts, but loan officers don't need to worry themselves about that. We have an amazing operations team that does a great job explaining, educating, training, and ensuring that everything is correct. And it feels good when you get a new title escrow officer that gets this down, because if they do a great job, we kind of keep them in our database in case we need to reach out on another transaction.
So all of that, very good. Quick, like one thing that you mentioned there, do they need to sign 3 days before? So on a purchase, if they're getting cash out from the trailing residence, which it sounds like on almost everyone they are, you have to sign that. It needs to close 3 days before. And then do you do 2 closings? Do you execute one that's almost like closing on the loan, then 3 days later you close on the real estate portion of it?
Nope. No, remember, it's one set of closing documents. They just need to be signed. So it's a purchase, but there is a cash out refinance clause in the documents that mandates that 3-day right of rescission. So they close their purchase
sign then
on
3 days
Monday.
later?
Yep. It just won't fund or record until 3 days later.
And so this is my last question on this. Would the seller then sign 3 days later on like the day? So, right, I'm here in Michigan. We table fund everything. It's all, for the most part, table funding. So would the seller sign on day 3 when they're actually doing the table funding?
So it's not as important when the seller signs, because the title company is not going to record or do anything until they get the money. So we have sellers that sign on the funding day. We have them that sign the day before, 2 days before. Some sellers sign like a week before because they're going out of town. They're not going to be around. And it's really just up to the title company, from a legal perspective, to make sure they're doing what they're supposed to be doing and not, funding or recording anything ahead of time.
Hey, I want to get a quick message to you here about adding value. And our industry is terrible at telling you, do this, do that. So many people want to add value to you, but value is not in what I give. It's what you receive and whether it makes sense for you or not. We've got a community, CEO1440, where we post every single day, lots of things, sales scripts, a whole plethora of things. So I don't know what particular things are going to add value to you. They probably all won't, but definitely some of them will. The community is free. Would love for you to get in there, sniff around, poke around, and maybe there's more stuff we can do. But I know it starts because if you're anything like me, you like to get in there, check things out on your own before you go and sign up for some large commitment. So get in there, check out our group. I bet that there's something in there and there's little things that you can do that had you known 6 months ago, you'd be making more money today. Join the group. Look forward to seeing you in there. Have a great day and enjoy the rest of the show. Well, the good news is you guys have been doing this. So the questions I'm asking, you've already crossed most of those paths. But if anybody listening to this is anything like me, right, you always want to see the potential problems that you're going to have before you run into them. And they've been doing this now for a few years. And, I know I spoke to Peter even before he went and started working there. Like, hey, what do you think of this? And, it's kind of morphed. And every single time I talk to you or have interaction, like you guys keep figuring it out a little bit more and a little bit better. And you probably have a ton of, scuffed up knees and scars along the way. But at this point, it's the best it's ever been as long as I've known him. And it was really cool a year and a half ago.
Yeah, we've got a really good team. I mean, it's a specialty product, but it's not very complicated. Remember, it's stated income. We are verifying assets a little bit more these days, just because some of the additional states that we're going into, although we're exempt from the ability to repay on the federal level, some states have a requirement of the ability to repay, and if we're in that state, the state trumps the federal. And so to make it easy for everybody, we're starting to verify assets now. And when I say verify assets, it's loosely. I mean, we don't ask, for, letters of explanations to source deposits. We're very loose on who can give a gift and things like that. At the end of the day, we just want to make sure that we're not putting a borrower in harm's way by giving them this bridge. That they either, one, have sufficient assets to tap into if their debt-to-income ratio is high, that they can make the payments on the bridge and their additional monthly obligations while they have it. Or two, they're getting cash back out of the funding of the loan and taking that cash as their own reserves, putting it in their own bank account, and using that money to make the bridge payments as they see fit each month, so there's not going to be any financial hardship.
Yeah, it's a fantastic program across the board. So you've been in this game for a long time. I like to ask everybody that hops on the show, if you were to get back into originating today, everything else, all other options were gone to you. You had to go out and start writing loans again as a way of feeding your family. What would be the couple of things, one or two things that you would focus on, knowing what you do now after 32 plus years of doing this? Where would you start?
I never originated a bridge loan. I never really even knew kind of what a bridge loan was. It took me a while to get on the non-QM bandwagon once that came out as well. I've always kind of been, a straight guy with blinders on, all of my government. And, I was even late to the USDA game, but, I finally caught on to that. I would say that, really understanding that this business is a value-based relationship business, and whether it's value towards the consumer or value towards an industry partner that you're relying on to help build business, the focus really needs to find ways to provide value in a differentiated way, right? Nobody, well, maybe some people do, but you're not going to call agents and say, oh, we got great rates and great service. Yeah, so do the other 4,000 loan officers that are calling me every day.
For sure.
Right? How can you help me? And so I think being more purchase focused. So when it rains refis, that's icing on the cake. Understanding that mentality and looking at the environment over the next decade, listening to guys like Barry Habib and their market outlooks and their forecasting, and looking at the different segments of the populations of people and what's going on in the United States. And I mean, there's amazing opportunity. And I think loan officers get distracted with the next shiny new object that's out there, right? And this isn't the shiny new object that's out there. Our parent company, Pacific Private Money, has been doing this for over 12 years. And so by offering this product by over 12 years, Arrival was DBA to spin off and just grow and educate the market for this specific product, and that's all we do, and we do it very well. But in 12 years, we've never foreclosed on a borrower, we've never lost an investor money, and we do good loans for good people that we know are going to be able to pay them back at the end of the day. So I would definitely look at a singular solution for a bridge loan. I think it's also a good idea to present options and make recommendations from a consultative standpoint based upon those options, because you don't want to recommend a solution to somebody when there's other potential solutions out there that you didn't even talk about, and then they go and find that out from someone else, and it may not even be the right solution, but you didn't talk to them about it, and so now they're a little bit less trustworthy of you because they found out about another possible solution from someone else. So even if it's not the right one, you want to talk about it and educate it, because that's where some value is built.
Yeah, clients ghost loan officers, but they ghost you because they found somebody else that adds more value. They don't just disappear from the market. They're not a ghost. They just are ghosting you because you don't have the best answers and the best solution for them. And I do believe that this product, there is going to be this massive wealth transfer, right? You've got all these boomers that own these houses free and clear. That's all going to shuffle down to millennials and younger people that are going to need options like this to figure out, what do I do with mom's house, dad's house, as these things, these moving parts. So if you're not understanding how all this works, you're definitely going to be missing out. I've got a program in our mortgage broker builder community called the Riches and the Niches, that loan officers, if you want to walk through a playbook of exactly, like, there's scripts in there. What do I say to an agent? How do I identify good agents to go after? It's not an exact playbook for Arrival Home Loans, but it is an exact playbook to leverage those niche programs, those things that make you unique, that might be just worth something to dig into. Got a bunch of different free things and got all kinds of stuff. I got stuff. You want to pay me a lot of money to coach you on this, all the way down to free stuff. But these programs are something that you need to have inside of your quiver if your company's not providing them for you. And a lot of people today are moving from, working at a Rocket to going out, hanging their shingle someplace else, and then getting left alone. Well, these are things that you need to have an understanding of and be able to present to your clients. So I think this has been great. I really like what you guys are doing out there. I think it's super cool and definitely fills a need for a lot of people that are not selling today. Your biggest thing is you just need more people to know about you, and you guys blow up.
Yeah. I mean, we're growing month over month for the last 2 years, and but it's education, because this is a great solution for 20% of the market. 20% of buyers out there could benefit from a singular solution like this. Absolutely.
Yeah, and when you talk to real estate agents, they just nod their head. They tried a bridge loan 8 years ago and it didn't work out. Oh, I know all about bridge loans. Well, it's not even close to the same thing. So, well, anybody that was still sitting here, one, thank you for listening. We'll get some links out where you can get in touch with Peter, how you can find him on LinkedIn, Arrival Home Loans. We'll put some links someplace. If you want to talk to me about different solutions, I have a whole bunch of different things that we're constantly looking at, different options. Maybe it's this, maybe it's something else. Again, my goal at the end of the day for anybody that's listening, I want to help you do more business, because at the end of the day, if you're not doing any business and you're just gone out of the business, I can't help you. I make money helping people. So I want to see you do really well so I can help you. And then I think, Peter, you got any parting words for anyone?
Yeah, so if you want to learn more about Arrival Home Loans, one, I invite you to follow the Arrival Home Loans LinkedIn page. We post a lot and offer some sales tips and ways to, communicate this so that folks can understand. And two, if you go to YouTube and you type in Arrival Home Loans, we've got public webinars that are uploaded there, usually about 20 to 30 minutes long, and you can learn some of our guidelines, some of the ins and outs, the moving pieces, some of the questions that other folks have. And then, of course, you can always reach out to me directly, peter@arrivalhomeloans.com.
Awesome. Well, hey, I appreciate it. Thanks for doing this. Any changes, anything along the way, always feel free to reach out. And I intend on bringing you some loans here in the not too distant future. So we're going to make a little focus on it.
Yeah, I certainly appreciate it, John. Thanks for having me on. It's been great seeing you, watching you grow and expand. I'm seeing your followers and your network continue to grow. So kudos to you. And I really do appreciate you inviting me and allowing me to come on and talk about Arrival Home Loans today. Thanks.